Welcome back. Previously, we discussed in brief the tools of measuring the performance of an organization, mainly financial measurement tools, and we have completed return on investment and residual income. Let us discuss about the other tools comes under the same category. Next tool, economic value added. EVA is a form of residual income measurement. It is a refinement of the residual income. EVA was developed by Joel Stern and Bennett Stewart of the US consultancy firm in 1980 as a measure of business performance. So let us come to the theoretical aspect of economic value added. We all know the meaning of accounting profit. Accounting profit forms the basis of the computation of EVA, otherwise known as economic value added. However, accounting profit is determined without deducting cost of capital employed. So it is not a measure of economic profit. EVA measures economic profit by deducting the cost of capital employed from the accounting profit. Accounting profit means the operating profit after tax. So, EVA is the return a firm earns in excess of company's after tax operating profit over the required rate of return expected by the investors. In simple terms, we can say any surplus generated from operating activities over and above the cost of capital is called EVA. As already stated, EVA is the excess of after tax operating profit over the required minimum rate of return that the investors may earn by investing in securities of similar risk. It is generally calculated by using the following formula: EVA equal NOPAT, NOPAT minus TCE into WAAC. We will discuss each one. NOPAT means net operating profit after tax. Remember, it is a net profit after tax, but there is no information regarding interest. So let us assume that it is net profit after tax before interest. Let it be like that. Next one, TCE, total capital employed. And finally, WACC means weighted average cost of capital. If you are learned in financial management, you might be familiar with the term weighted average cost of capital. So, usually cost of capital is employed on the basis of weighted average cost of capital, otherwise known as average cost of capital. Similarly, average capital employed is better than the total capital employed. It may be noted that instead of minimum expected rate of return, actual cost of capital is used for calculating EVA. So for time being, I am giving some areas as activities. Let's go through it. Steps in the calculation of EVA and under steps in the calculation of EVA. First one, you need to find NOPAT. NOPAT means net operating profit after tax. We all know how to find NOPAT. Second one, calculation of capital employed or invested capital. I hope you have just gone through that area, capital employed. We have learned about what is meant by capital employed, what are the equations for finding the capital employed. So just go through those equations. And finally, calculation of weighted average cost of capital, and usually it may be represented in percentage. I hope you know what is meant by cost of capital. You have learned about cost of capital in financial management area, so you might be familiar with how to find the cost of capital of each capital item. For example, cost of equity, cost of debt, cost of preference, as well as cost of retained earnings. You have to be familiar with those areas and try to study or learn what are the areas or theoretical aspects as well as the equation that comes under weighted average cost of capital. because we will be dealing directly towards the application of EVA. We will not be going in detail regarding the computation of average cost of capital. And in most of the cases in the question they might be directly give the average cost of capital or the cost of capital of each item. Sometimes they may ask to find the individual cost of capital. So just go through it. And finally, you need to calculate EVA. So before going to EVA, this is the equation for calculation of weighted average cost of capital, cost of debt into 1 minus tax rate into proportion of debt plus cost of equity into proportion of equity. So what is the meaning of this equation? In the equation you need to find WACC, that is weighted average cost of capital. The equation for finding weighted average cost of the capital is this one. And we all know a capital structure consists of debt, equity, likewise. So the equation begins with cost of debt, because it is natural in every capital structure there will be a debt. So cost of debt means the percentage of debt. For example, 8% debentures, that 8% represents cost of debt, into 1 minus tax rate. And regarding 1 minus tax rate means we are adjusting tax. We need the results after adjusting tax. See, here the equation is at the net profit after tax. So since it is after tax, we will be using 1 minus tax rate. It's just a basic function we will be using in the computation. If you multiply anything with minus tax rate, it means you will get a value that is after adjusting tax. So cost of debt into 1 minus tax rate. Then why we are using 1 minus tax rate with the cost of debt is that the debt or the expenses with regard to debt, it is always subjected to tax deduction. So in order to adjust that, we will be multiplying 1 minus tax rate into proportion of debt. Proportion of debt represents what is the share of the debt in the capital structure. We will discuss that part during the computation, don't worry. Plus cost of equity. Cost of equity, just like the cost of debt, there will be a percentage representing the cost of equity. For example, 12% equity share capital. That 12% represents equity cost of equity. Plus into proportion of equity, just like the proportion of debt. What is the share of cost of equity or equity capital in the total capital structure? That is the meaning of proportion of equity. So this is the equation for measuring weighted average cost of capital. And once you found out NOPAT, capital employed and weighted average cost of capital, you can easily find EVA. And the EVA equation is NOPAT minus TC into WACC, and you might be getting a positive value or a negative value. If you are getting a positive value, it means the company is creating wealth and it is working well. If the EVA is negative, the company is not in good position. So this is the yardstick or the scale for interpreting the results. And for your homework activity, try to identify in detail the steps in the calculation of EVA. There are points that has to be considered while calculation of NOPAT, as well as calculation of capital employed, as well as calculation of weighted average cost of capital. I have just give a details regarding the core area regarding the calculation of EVA. Sometimes in the question, university exam, they might ask, explain briefly the steps in the calculation of EVA. In that case, you need to specify what are the factors that has to be considered under NOPAT. So try to refer other texts or try to refer internet sources to identify the various points that comes under steps in the calculation of EVA. So it's better you search for brief explanation regarding the calculation of EVA and note down those points. Because of the time constraint, we can't go further in detail regarding each steps. Just gone through the core areas. We will be discussing about the practical application of EVA. So, as an activity, try to identify the steps in calculation of EVA with a brief explanation. Next one, let us discuss an application level case, then you will get a clear glimpse into the concept which we have discussed just now. It is the details of a concern. So the details of a concern where the revenues of the organization is given, projected advisory fees 2 lakhs is given. So that is only revenue of that organization. So total revenue is 2 lakhs. And the expenses of the organization include direct expenses 1 lakh. So no other expenses. So let us total revenue be 2 lakhs and total operating expense be 1 lakh. And finally the operating income is 1 lakh. This is the current position of a business. So let us discuss the further details regarding the organization. The company has a total investment capital of 3 crore. Of this, 2 crore is through equity funding and the rest 1 crore is by means of long-term debt. So here the total capital structure is given and its details of the capital structure is also given. Assume the cost of debt to be 8% and the cost of equity to be 10% and tax rate to be 30%. Calculate EVA. So before we going into computation, I hope you have understand the concept of EVA, NOPAT, WACC and capital employed. Remember, NOPAT means net operating profit after tax but before interest. And by the term before interest means, remember, interest is a tax deductible expenses, therefore tax is calculated after deducting interest. So remember to do that computation accordingly. And regarding the capital employed, depending upon the nature of the question, the capital employed may be net capital employed or a gross capital employed. Usually try to use the equation capital employed is equity plus long-term debt, or you can use the equation non-current assets plus working capital. We have gone through that equation part discussion in the previous slide, so just go through it. And remember, marketable securities and capital work in progress should be deducted from capital employed. Remember to do that. And during the computation of weighted average cost of capital, I hope you understand this area. It is calculated by multiplying the cost of each source by its respective weights. Then the weighted cost of all sources are added. That is known as weighted average cost of capital. I hope you remember the equation for computing the weighted average cost of capital. Remember, we will be using 1 minus tax rate. It is a tax saving on interest paid on debt. And remember, such tax computation adjustment will not be done in case of cost of equity, because cost of expenses or with regard to equity are not subjected to tax deduction. It is only applicable in case of debt to capital. So remember that. So I hope you have a clear idea about what is meant by EVA and what are the contents of the equation within the EVA. So let us go through the application level case here, then you will get a clear glimpse. So first of all, let us find NOPAT. NOPAT means net operating profit after tax. In the question, operating income is given, otherwise known as earnings before interest and tax, 1 lakh. And from that, tax has to be adjusted. Here in the question it is said that tax rate is 30%. So if you deduct tax, you will get 70,000. Next one, calculation of weighted average cost of capital. Before we go further into the calculation of weighted average cost of capital, remember in the computation of NOPAT, if in the question if they specify in detail regarding the interest payment on any of the debts or if any sort of such tax adjustable items are given in the question, that has to be adjusted in the computational NOPAT. Then only you need to adjust the tax on EBIT. In this question, there is no specification regarding interest to be paid or any such tax adjustable items. So we are going directly by deducting the tax rate from the earnings before interest and tax. So you got 70,000. So next one, weighted average cost of capital. Here the capital employed is 3 crore and it is obtained from 2 crore equity capital, 1 crore debt capital. So the ratio between the items in the capital structure is 2:1. Remember the proportion. So proportion of equity capital is 2/3. Remember the debt capital proportion is 1/3. So let us substitute in the equation. Weighted average cost of capital equation is cost of debt into 1 minus tax rate into proportion of debt plus cost of equity into proportion of equity. Cost of debt is already given in the question, 8%, 0.08 into 1 minus tax rate, it is given 30%, so 1 minus 0.3 into proportion of debt. So proportion of debt is 1/3 plus cost of equity is 0.1 0.2 into proportion of equity is 2/3. By substituting then using the basic mathematical step, you will get the answer 8.54. So the weighted average cost of capital is 8.54 and the net profit after tax is 70,000. So let us substitute these details in the equation. Calculation of EVA, we know that EVA is NOPAT minus TC into WACC, and NOPAT is already found, 70,000 minus TC is 3 crore into weighted average cost of capital is also computed. So the economic value added is 6 crore 74 lakhs 38,000. So this is how you have to do or make the computation regarding economic value added. And the only thing you have to keep in mind is that during the computation of NOPAT, sometimes the interest items or items will be given in the question. In such case, you need to do accordingly because interest is tax direct adjustable, and whenever such interest is given, you need to deduct from EBIT and the adjusted amount. From that adjusted amount, you need to adjust the tax percentage. So just go through it. We will discuss about the further cases in the next session.